Okay, let's jump right into this explainer. Think of today as an elite growth marketing strategy session, specifically designed to be your ultimate defense mechanism for securing your luxury real estate's platform independence. If you've been feeling like your high-end property is just a glorified side hustle rather than a resilient cash-flowing asset, well, you're in exactly the right place. Today, we are focusing 100% on an advanced operational architecture known as shadow inventory management. We're going to break down exactly how elite operators engineer private white-label portals, link up instant API channel managers, and completely insulate their booking metrics from those ruthless algorithmic penalties.
To kick things off, we really need to expose a somewhat harsh reality. You might think you're in the real estate business because, hey, you want a gorgeous physical asset, right? But online, you are very much in the algorithm business. You are managing multi-million-dollar assets that are quite literally at the mercy of an $84 billion high-frequency trading bot. And let's be real, that bot, it has absolutely zero appreciation for your imported Italian marble countertops. It only prioritizes one single thing, and that's conversion velocity. It just wants to turn a browser into a swiped credit card as fast as humanly possible so it can grab its 15% fee. So what actually happens when you don't feed that algorithm's need for speed? Well, you get sent to the shadow lanes. That's the algorithmic penalty box. High net worth guests usually decide in about 7 seconds whether they're going to book. If your listing fails that 7-second visual audit, maybe the photos are just a tiny bit dark or the layout is confusing, the user hesitates. The algorithm instantly flags your property as a conversion risk and just shoves it to the back pages. Your visibility drops to basically zero. It's effectively like serving a Michelin star meal on a flimsy, greasy paper plate. The quality is definitely there, but nobody perceives the value, so no one takes a bite. This dynamic creates a massive, massive divide in the market. On one side, you have the tired, reactive commodity host. They're 100% reliant on major online travel agency algorithms, the OTAs. When their calendar looks empty, what do? They panic discount. And that just trains the algorithm to treat their luxury home like a cheap bargain bin commodity. But on the other side, we have the proactive, elite asset governor. These operators use technology to actively mitigate risk. They have independent distribution, they hold firm on their premium pricing, and above all, they relentlessly protect their net operating income. They're running a distributed boutique hotel, not doing glorified babysitting. So, the absolutely crucial question is, how do you cross that divide? How do you become that elite asset governor? You implement our core solution, shadow inventory management. Think of this as your independent distribution layer. It's a highly specialized operational architecture designed specifically to protect your booking velocity from those arbitrary algorithmic reach penalties we just discussed. It's really all about taking back control, so your multi-million-dollar portfolio isn't held hostage by a single consumer booking app.
Let's move into Pillar 1, architecting distribution moats, which means building private white-label portals.
To transition from playing defense to actively generating wealth, elite operators are actually building their own highly secure direct booking web properties assigned to specific asset names, and the data completely backs this strategy up. A recent industry report revealed a massive 37.5% rise in direct bookings compared to previous years. This signals a fundamental, game-changing shift in the landscape. Elite hosts are actively pivoting away from total reliance on the major OTAs to build their own platform independence. That is a massive slice of revenue where hosts are keeping more of their margins and, crucially, taking permanent ownership of their guest data.
And here is exactly why they're doing it. These private white-label portals offer just incredible operational advantages. First off, you bypass those massive 15% consumer app middleman fees entirely, just gone. But it's also about who you're attracting. A dedicated, branded microsite lets you capture lucrative corporate event planners and secure high-margin, repeat, high-net-worth travelers who genuinely value discretion and direct relationships. You're signaling luxury and significance. And most importantly, you regain total control over the brand experience from the very first click right through to checkout.
That brings us to Pillar 2, multi-channel synchronized listing stacks and the instant API advantage.
Having your own portal is fantastic, right? But to scale safely across the entire luxury ecosystem without totally losing your mind, you need flawless tech. A lot of hosts try to sync multiple calendars using basic iCal links. Let me tell you, iCal is dangerously slow because platforms only pull the data maybe once a day. which leaves a terrifyingly high risk for catastrophic double bookings. Plus, centralized price syncing, it's literally impossible. By contrast, API connections, specifically JSON and RESTful APIs, push updates instantly. The double booking risk drops to near zero, and your price syncing is seamlessly automated. This is vastly superior and absolutely mandatory if you're serious about protecting a luxury asset.
Once you have that robust instant API channel manager in place, you don't just blast your multi-million-dollar property across budget sites. No way. You utilize those API sockets to safely expand your digital footprint onto elite niche distribution platforms. We're talking about places like Plum Guide, Homes and Villas by Marriott International, the Quintess Collection, and Smiling House. These platforms cater directly to affluent, discerning guests who really understand value and prefer curated exclusivity over the mass market options.
So, what's the actual financial payoff for setting up this advanced API-driven infrastructure? Up to 40%. That's a massive number. By utilizing instant API connections, elite operators can deploy highly advanced dynamic pricing. They don't just set static summer or winter rates and forget about it. They ingest data to identify hyper-local micro-seasons, like, say, a suddenly announced biotech conference or a regional marathon. They aggressively spike their nightly rates during these brief windows across all channels simultaneously. Because the API completely eliminates the fear of double booking, this strategy alone can boost your annual income by up to 40% without adding a single extra night of wear and tear to the physical property.
Let's dive into Pillar 3, neutralizing search engine throttling loops through strategic vacancy.
To truly protect your long-term equity, you sometimes have to completely flip conventional wisdom on its head. The academic term for this, pulled straight from institutional property research, is temporal disintermediation. It sounds like a mouthful, but the definition is simple and incredibly powerful. It's essentially the ability to develop an opt-in or opt-out routine to remain highly agile. You intentionally stop sales on major platforms for a short time when local market demand is sky high. Instead of begging the algorithm for a little attention, you're actually treating vacancy and platform disconnection as a deliberate strategic tool.
Let's walk through the exact 3 steps of how you execute this like an absolute pro. Step 1, detect the peak event. You use your dynamic data tools to spot that upcoming hyperlocal micro season way before the general public does. Step 2, unlist from the OTAs. You intentionally hide those highly sought-after seasonal calendar blocks completely from public consumer directories. Step 3, book direct. Because those dates are hidden from the algorithm, your fractional remote team can execute much higher margin, premium private placements manually through your secure white label portal. You're capturing peak revenue totally on your own terms.
As we pull all of these concepts together, it is so vital to remember why we're engineering these complex tech stacks in the first place. All these highly technical API connections, custom white label portals, and strategic disintermediation tactics, they all serve one singular unified purpose. As our sources beautifully point out, the ultimate luxury isn't just the infinity pool or the imported marble countertops. True luxury is the rational certainty of invisible management. It's actively removing that physical entropy layer so the owner doesn't even have to think about the asset. It's about achieving total invisible asset governance.
Which leaves us with this final, truly provocative thought to take away from our strategy session today. Take a hard look at your current operations and ask yourself honestly, are you truly governing a high-yield asset? Or are you just exhaustively feeding an algorithm? Let's be real, it's time to ditch the commodity mindset once and for all. Implement shadow inventory management and start engineering your own platform independence today. Thank you for joining me for this explainer, and I highly encourage you to look at how you can start building these distribution moats right away. You've got this.